and I don't think it's my base case that we we have a real problem with the dollar, and in which case we end up with having to have some sort of Plaza Accord agreement, which is something we should be nervous of because that kind of agreement is not going to be with the US talking about reducing the dollar as much as others saying we need to move away from the dollar, which is something I've talked about for a long time. One of the whole thesis behind the Bitcoin Life Raft video that many millions of people have seen is about this very situation of the strength and the dominance of the dollar. The US economy is 25% of the world's economy and 87% of every single trade transaction on earth. So it's everybody else's problem. And the world has kind of had enough of it. And a lot of people think the dollar dies from weakness, but I think the dollar dies from strength. So we need to be careful. These are very long-term charts I've been using, but if it plays out this way, then either over the next 18 months, we get a shocking dollar move, or we get respite again and it plays out in 2 years' time. But it feels like it's going to come one way or the other. Nothing can stop the dollar milkshake theory playing out.
Wow, that's a really big thought to digest. That's one we're going to have to come back and revisit again. And you're absolutely right. I mean, I remember chasing around Robert Rubin and strong dollars in the U.S. interest, but things have changed a lot since then. And you're
right now it is because it's lowering the price of imports.
Yeah.
But it's not in anybody else's interest. I mean, Germany's now got a trade deficit because of stuff like this. And, we've already blown up Sri Lanka and we'll blow up more emerging markets if this continues. So, it's a complex world out there. And what this is telling you is there is a dollar shortage. And in times when monetary conditions are tightening, people want their dollars back. And if you're a borrower and you need dollars to pay, you've lost revenue because the economy's shrunk and money's less easy to borrow. So what happens is you will pay up for the dollars. And that's what happens. It forces the dollar higher and weaker economic growth. Now, the DXY also year on year works pretty well with the ISM. And it's currently pricing about 45, which is a recession. Now, so that tells me that we are closer to the end than the beginning of the move. But again, we could see that spike, that one last final spike in the dollar. And then that would tell me that the worst dollar scenario maybe is in due course in a couple of years' time.
We have Angela asking, and I think you've touched on this at different points. I'm going to try to squeeze as many in, even though we've stretched it. We're going to keep you for a couple more seconds. Angela asking, if you had new money to deploy for investing today, where would you put it? You mentioned a couple of the things you're looking at, but what do you feel most convicted about?
I'm most convicted